All right, welcome back to the program. Joining me right now is Johnson Chukwu, who is the Group Managing Director at Cowry Asset Management. Mr. Chukwu, good morning and good to see you. It's been a while. How are you doing?
Good morning, Chief Nancy, and thank you for having me. Well, I've been doing well. Been weathering the economic climate.
Everyone has been trying to do that. Let me ask you, is really half time? Can we review, can you review half one? That's H1 for me. Just like in a minute. How has the economy performed, at least in the first half of the year? We did try to put some things together, and I'm seeing it here on the wall. So my team can really put that on air. Yesterday I was cracking my head. I was like, okay, I really need to look for data, so to speak, on how the economy has fared in the first half of the year. And I did put some things together, I think, which they will be putting on shortly. But in your own view, speak to me about how the economy has fared in the first half.
Well, I think the economy has struggled in the first half of the year. Of course, we've seen several factors that are exogenous to us impact heavily on the economy. Probably if you look at it on quarter basis, you feel that the first quarter, the economy did relatively well at a growth rate of 3.11%, though that was a decline from the 3.98% recorded in the last quarter of last year. But subsequently, in the second quarter of this year, which all cumulated into the first half of the year, the economy has gone through difficulties. We saw a period of severe fuel crisis as a result of importation of adulterated fuel or off-spec fuel. We've seen beyond that, we saw the start of the Ukraine-Russian war on February 24th. And after that, we've seen virtually inflationary pressure intensify across the globe, not just in Nigeria, but has also impacted heavily on Nigeria. Though I will also still say that ours is still muted because of the price cap on fuel. But beyond that, we've also seen gas prices go up. We've seen destruction, and we've not seen, at the local level, we've not seen major improvement. We've seen worsening in food inflation, worsening in insecurity, which has a direct impact on the economy. And then we've also seen higher rate of inflation. Inflation at the end of May was 17.71%. We've seen further depreciation of the local currency. At the parallel market, Naira is trading about 614 or 615 Naira to $1. If you look back about a year ago, it was about 477 Naira to $1 at the parallel market. We're talking about almost 50% depreciation of the local currency. And then you've seen prices across, but most importantly, the food items, food inflation at the all-time high. So if you look at the capital market, we've seen major appreciation. Of course, we know why the equity market has continued to appreciate, principally because there are no alternative investment outlets. People are not invested in fixed income instruments, because if you look at T-bills yield at the end of May, the end of June, first half of the year, T-bills, 3-4-day bills were trading about 6%. Which is just about the dividend yield you would expect from any good investment. So that's why investors have actually underweighted their equities, their portfolios in fixed income, and overweighted them in equities, which is why you saw a rally of about 21% in market cap or all share index in the first half of this year. So it's, in terms of revenue, the government is struggling with revenue. At the end of May, according to OPEC, Nigeria's crude production was just about 1.024 million barrels a day, when our quota for July was about 1.779 million barrels a day. So we're doing just about 80% of our OPEC quota. And that has impacted negatively on our foreign reserve. We saw a decline in foreign reserve from about $40.5 billion at the end of last year to about $39.1 billion, irrespective of the fact that we were witnessing a more than 144% increase in the price of crude. Average price of crude in the last half of last year was $53. First half of last year was $53 per barrel. This year, it has averaged in the first half of the year about $129.8 per barrel. So despite the sharp increase in crude price. Ordinarily, a country like ours should be celebrating. We should be talking of Ukrainian, Russian oil windfall, but we are actually reeling in pain because our reserve is going down, our foreign exchange is not going up, and then at the same time, we have to import more. I saw a report in one of the newspapers that said, look, the importation of this aviation fuel actually increased by more than 200%. Compared to what it was in the first half of last year. So, and that also impacted on price of diesel. Today, at the pump price, diesel is trading about 800 naira to a liter. Even fuel that is regulated, in most filling stations, you are going to buy them at 180 naira to a liter, particularly in the southeast of the country. And the northern part of the country, in the place like Kano, the price is going as high as 200, 210 naira per liter. All because of the fact that we have not gotten our economic act together as to refine petroleum products locally, because the impact wouldn't have been this severe if we have an effective and functioning refinery industry.
Okay, what's your outlook generally? If I can get a sentence for that, your outlook in for H2 2022, which we have started now. This is the fourth day. What's your outlook in a sentence? Then we can take it from there.
Well, I think the economy is going to still continue to be under pressure. Inflation pressure is going to intensify. Exchange rate pressure will intensify. Standard of living will deteriorate further with erosion in the value of local currency and erosion in the value of money. So I think Nigeria should brace up for more difficulties in general terms, in the second half of the year.
So we should brace up for more difficulties. The predominant thing that would happen this second half will be that of campaigns and politicking. 2023 is definitely before us. What do you think happens to the economy when the campaign starts? That is, if it hasn't started already.
I guess it has started, though it's supposed to officially start by September, but given the level of technological evolution of the world today, campaign has started. But let's take it on a sectorial basis so that we can have a proper perspective to it. The effect of political campaign would mean that several people who were previously unemployed will become underemployed. That means they will have some engagement in form of a rented crowd that will come to campaign grounds, and then they will be getting stipends. So you're going to see a reduction in the level of unemployment, but an increase in the level of, a reduction in the level of unemployment, but an increase in the level of underemployment. So these people that are going to be newly getting some income will spend on basic necessities of life. So you are, the producers or manufacturers in certain sectors of the economy are going to benefit from it. Those in the beverage industry. Beverage industry in this instance includes beer and breweries. Things like basic needs, clothing, food. There will be so much demand, there will improve demand for such items. So you should expect that manufacturers in the beverage industry should expect some uptick in the demand for their products. Some other sectors will also benefit. Those in the media industry like you are going to see a lot of adverts. People in the social media space, particularly micro-bloggers who have built some reputation, are going to see some patronage. Some of them will be recruited to campaign for some candidates. So you're going to see cash flow into their businesses. The telco companies are also going to benefit, particularly for data services. You're going to see an uptick in that sector. But beyond that, if you also look at other sectors, the sector that will suffer, the oil and gas sector will see further increase in prices. You're going to see further disruption in supply of products because the cost of bridging will not be covered. What they pay as compensation of bridging or will not be enough to cover the bridging cost as price of diesel will continue to increase. It's not likely that the issues around energy supply will improve in the immediate future, at least not in the next 6 months. So you should expect higher prices of fuel, higher prices of diesel, and then because of higher prices of diesel, the cost of production is going to go up, and you are going to find some companies will find it difficult to meet the energy cost because we are not seeing any improvement in the national grid supply. I mean, coming from national grid supply. So people are still going to try to rely on their own generated fuel to power their factories, and that will put a lot of cost on them. And what that means, they're going to see a cost-push inflation, further worsening the inflation situation. And then, if you look at some sectors beyond that, the agricultural sector, ordinarily you should expect the increase in demand and substitution in terms of because of increased cost of imported food items should benefit the agricultural sector. But unfortunately, the agricultural sector is facing a different challenge, that of insecurity. And you are going to struggle to see improvement in agricultural production. We've seen consistently quarter-on-quarter decline in terms of contribution to agriculture, as well as level of food production. That will likely worsen. Two things: some of the labor that are actually active in agricultural activities will shift to campaign grounds as hired crowds, and then added to the fact that a lot of farmers have been displaced. So that means that the cost of food items will also worsen in the coming 6 months. So on average, I think, depending on the sector, some sectors are going to benefit. I mentioned the issue of sectors like the media industry. It's going to benefit from that. Those in the textile industry are also going to benefit, because you're going to see a lot of uniform making for those who are going to wear them to campaign grounds. So there'll be demand for that. Tailoring services would increase. On average, I think on a sector-by-sector basis, it depends on what you're looking at. Then at the macro level, I did mention that Nigeria's crude production has continued to worsen, and that means that foreign exchange earning will continue to decline, and well as import bill will keep increasing because of the higher price of energy imports. So that means reserve will continue to be under pressure, exchange rate will deteriorate further. Inflation rate I had mentioned that will also deteriorate further in the second half of the year.
Okay, Mr. Chukwu, you've said quite a lot. Let's see if I can interrogate that very quickly. But before I move into some of the things which you've said, at this time, do you think that governance has been abandoned and politics has really been faced? And what is the outlook, at least in the next coming months? Because from what you even said earlier, the campaigns really have started, however subtle it is, though we're going to see an official start of it in September. Are you afraid that governance really will be abandoned? We didn't even see much of governance before. Then now, completely abandoned. What will happen?
Well, Nancy, what I would say to you is that we have, in your program, I've complained repeatedly that the fiscal side of the economic activity has always been weak. We've seen a lot of fiscal doldrum, and I don't think there will be any material difference. When you talk of abandonment, governance has been abandoned for the past 7 years. I'm sorry to say this, but that's the way most Nigerians feel, and that's the way I feel. We've not seen strong presence of government as it relates to policy directions. So maybe you're going to see a slight worsening of that situation, but we've not seen that dominance, that effective governance. And I think we're hoping that by the time the election is concluded, we're going to have a more active governance at all the levels of public administration. At the state levels, remember, most of the state governors will be completing their second term in office. So in terms of, if you have a focused governor who is concluding his second term in office, what they will be preparing to do is to close strongly, to end strongly. Ordinarily, you should expect whatever they have left, they will throw it in the next 6 months or 8 months to leave a good legacy. Since they are not campaigning for the election. Some of them will, to some extent, follow their anointed candidates if they have the ones who are anointed the candidate to some campaign ground. But if you have a mission-focused and mission-critical governor who is ending his second term, which also what should have applied at the federal level, that they will throw in the last 6 months or 8 months of their remaining tenure to leave some level of legacy. I remember somebody like the former governor of Anambra State, when he was finishing his time, he said he wanted to finish strong, and a lot of things happened. But let's even bring to the same memory the immediate past governor of Lagos State. He worked day and night to complete the highway from the airport to Oshodi because he wanted to leave that as a permanent legacy. I remember he did everything to make sure that when he realized he wasn't going to run again, to make sure he finished that. That's what I expect of the outgoing government at different levels.
Do you foresee a politically or a social-politically charged climate, even as we are in the second half as campaigns will start, because we need to talk about that because it also has implications for the economy and perhaps what other people across the world will be watching. So the politicians should actually take time about what they're talking about because we don't want more volatility.
No, I don't think we're going to have so much of a socially or politically charged environment. I think the basic thing is that since we now know the presidential candidate, and the presidential candidates seem to have emerged from their party primaries based on the votes cast by the delegates. The concern would have been if any of the candidates felt robbed or not allowed to contest. What we saw was a situation where even the two major political parties, their candidates emerged in transparent balloting process, through transparent balloting process. The third forces, which are the Labour Party and the NNPP, also have candidates who have the general acceptance of their supporters. So it's going to be for Nigerians to go there and make choices among these four candidates or main four frontrunners. I think to a large extent, I don't see any of them throwing mudds at each other. I think that we're going to have a very civilized campaign process or campaign period because to a large extent, these are known quantities. And we all, as Nigerians, also know their orientation, their histories, their background, where they're coming from, their previous performances and achievements. So the choice will be ours to make. But I don't think we're going to have a charge or probably kind of volatile campaign period. I think all the party candidates will urge their members to respect the views and opinions of their opponents.
For the forthcoming 2023 elections, what do you think that the campaigns should sound like? And I'm asking that question in respect of what we've seen in the past few years. For me, I expect, a very intelligent campaign when it starts and not the usual stuff that we've seen over the years. What should it sound like? And what kind of questions do you think that Nigerians should be asking these front runners, both at the federal level and at the states?
Nancy, the most critical thing today is the economy. If you get the economy right, a lot of things will fall into place. It may not be the silver bullet that will fix every of Nigeria's problem. But I've always advocated, and I think I said this in your program a couple of years back, that the way the economy fails, everything begins to collapse, including the household, the family unit. They all survive on strong economic standing. When I see if today your husband cannot foot the bills of a house and you can't foot the bills of a house, your family unit will begin to disintegrate. So if we get the economy right, and I think that should be the focus of all the candidates, they should come up with how they're going to fix the economy. If you fix the economy, you're going to take away some of the pressures we're having today. Insecurity, part of it will be addressed because, like Fashola said when he was governor of Lagos State, that the agberos or the area boys who do not sleep at night will not allow you to sleep at night. And he created works for them. He created gardens and asked them to tend those gardens. And that brought down the level of insecurity in Lagos when he was governor. So I think the most critical issue in the country today is about getting the economy right. The economy is not working for you, it's not working for me, it's not working for most people. And it has created a lot of discontent and malcontent in the country. And that's what it's reflecting in the level of insecurity in the country. We need to fix that. And I think that should be what we should interrogate all the candidates. How do they want to fix the economy? If you don't get the economy right, everything you're trying to do will not work.
And Nigeria cannot afford another 4 years of this. I don't want to say what's in my mouth, but of course everyone knows what we've been passing through in the last 7 years economically. Now let's take a look at inflation, which you did talk about earlier, that inflation is likely to worsen. And my question to you really is about the central bank response to inflation. Of course, at the last MPC meeting, it did raise MPR to 13%. Why do you think that do you think that the central bank can still manage inflation since it's a supply side phenomenon? And not about a mismatch in demand? And not just even for, okay, we have our own peculiar problems though. Let me not go overseas, but let's stick here. I hope you understand what I'm saying. Do you think the CBN can manage? Yes.
Yeah, absolutely. Nancy, I've said this repeatedly in the past couple of weeks, that the central banks, the world central bank governors, not just Nigeria Central Bank, is fighting a different problem from a previous tool that used to work. The challenge we have in Nigeria today as it relates to inflation, which is also what applies to elsewhere in the world, is a supply side issue. It's a cost-driven inflation problem. It's not a demand pool inflation. It's when you talk of demand pool inflation, you say, let's shut down or let's reduce the level of money supply in the economy and or increase the cost of borrowing so that consumption will go down and that will cool the economy. Today, whether you reduce liquidity or reduce credit globally or in the Nigerian economy, you are still going to have diesel at 800 naira. Diesel at 800 naira is not because so much money is purchasing so few goods. It's because the landing cost of diesel has gone up because of the war in Ukraine. Russia is the largest exporter of crude, and the largest exporter of gas in the world. And Russia is also the third largest producer of crude in the world. Then you look at the other items coming into the mix. The price of wheat has gone up, price of bread has gone up. A loaf of bread is now about 800 naira. The price of other cereals have gone up. Remember, between Russia, Ukraine, and they produce about 1/3 of global wheat. So you're not going to change that as long as the war continues. So if you try whatever you do and cut down or step on the liquidity in the economy by increasing money supply, you're going to basically push the economy into a recession. Because what will happen is that you will further constrain consumption and therefore constrain production. And when you constrain production, you are going to push unemployment higher because the companies that are not producing will retrench. And what you're going to have is a self-fulfilling prophecy, which is what the global world banks, central banks are pushing the world economy into. They're pushing the world economy into a recession because in as much as you try to reduce money supply, reduce the level of credit in the economy, you are not addressing the fundamental issue, which is you must have to increase the availability of crude energy sources, gas, the liquid gases like fuel, diesel, ATK. You must increase the supply. You must increase the supply of wheat. You must increase the supply of fertilizer. These are factors that are driving up inflation. And that's why Lagarde, the IMF president, said, look, managing inflation has become an art. You know what that means? It is no longer subject to any law because science is driven by law, cause and effect. But when she said that managing inflation has now become an art, it means you just throw in whatever works. And I think the World Bank, the World Central Bank governors, including our own central bank, is approaching the current inflationary pressure with the wrong tools.
So that means even monetary models that we're seeing even across the world are really not working or would have limited effect on inflation. But let's come back to what you said earlier in terms of Russia-Ukraine crisis. Have you seen any significant response by the Nigerian government against the Russia-Ukraine crisis that we're seeing? The effect, against the effects of the Russia-Ukraine crisis in the country? Have you seen any significant, response?
I have not, and I'm hoping we'll see some in the near future. And some of the things that agitated my mind as an individual, as a Nigerian, is that this is the time for Nigeria to latch on to the crisis and attract foreign direct investment. We have LNG, which has been put on hold, which has not been completed. We have the Brass LNG. The European countries are looking for alternative gas supply to Russia. And this would have been an opportunity, given that Nigeria is actually a major gas deposit base, that the volume of gas in Nigeria far outweighs the volume of crude in Nigeria. So the investors today, if the Nigerian government goes back to the IOCs that are driving the Brass LNG, OK LNG, and even the Brass LNG, the one in Bonny. The one in Bonny can actually build more trains. And the key thing is that we must find the gas. To find the gas, or to explore the gas, or to drill the gas, we must address the level of insecurity in the country. Two things we need to do: address the level of insecurity, approach the IOCs, because if you approach them, their local governments, or what I mean by their home governments, will immediately encourage them to invest in LNG in Nigeria, so that they can substitute the gas coming from Russia. And that would have been, if we do that, we're going to get billions of investment into the economy in the next 6 months, because this is the Western economies are in a desperate situation. They're throwing money at Ukraine. That's not solving the problem. The economic inflation rate has gone up. In Europe, it's gone to 8.6%. In Germany, about over 8%. Some of these countries are seeing inflation at about, UK is about 9%, and they are not seeing inflation rate for more than 40 years at the current levels. And that's coming from gas supply, particularly energy supply, coming from occasioned by this war. Today, there is a compelling need for us to attract those investments, even if you call it attracting this investment at a crisis period like this. And Nigeria could have so much, and that will help us develop the Brass LNG, the OK LNG, and build additional trains on the Bonny LNG. So I think the government has not reacted or responded timelessly as one would have expected to take advantage of this ongoing war between Ukraine and Russia.
Now, the other question for you, which also troubles me, is the contagion effect that may likely come from the recession from Western countries. We've seen the forecast, or even the prediction. Everyone is talking about recession. In fact, just before I came into the studio at about 9 a.m. this morning to about 11 a.m., I was on a Zoom, I was on a virtual conference this morning, Standard Chartered. I think they did their global investment outlook, taking a look at the global environment. And what I was hearing from the analysts were not really heart-soothing. Do you think that Nigeria is ready and responding, or would likely respond to the contagion effect from a recession that would happen perhaps next year in Western economies?
Well, unfortunately, even the opportunity, we are not responding to the opportunity. So it's like we're sitting duck, they'll be taken by whatever happens in the global economy. I said earlier that we don't have the refinery that would have insulated us to some extent from the increase in the price of energy sources. Two, one, we should be taking advantage of this. We should, if we had gotten our ass right, we were exporting about 2.2 million barrels a day, we would have been pushed OPEC to increase our quota. I think the last quarter they gave us about 1.8 million barrels, knowing fully we wouldn't be able to meet that. So we should be taking advantage of that. As it relates to the cost push pressure that we're going to witness, the impact on inflation, the disruption in energy supply, Nigeria doesn't seem to have the capacity to protect itself. The first thing is that, do we have the refineries that would ordinarily substitute for imported refined petroleum products? Dangote refinery likely going to come on stream in the next 6 months, I think quite unlikely. So in effect, we're going to take on whatever increase that happened globally. And ours is exacerbated or worsened by the fact that we cannot even optimize the benefits of the increase in price of crude. So we're actually suffering two challenges. One, low crude production, and then you're importing the byproduct of those crude that we ordinarily should be exporting as well. We're importing at higher cost. So we should be ready, we should be prepared to take the contagious effect of this. Of course, we know that if the US economies and other economies go into recession, probably that will lead to a slowdown in demand for energy sources, and then we could see a moderation in the price of refined petroleum products. But that's the long call because the supply gap is huge. Those economies still need to go into deep depression as to cut down the energy cost, which will be worse than what they're even witnessing today. I don't see Nigerian bureaucracy preparing or having prepared to mitigate whatever would be the impact of a global recession on the economy.
You know, I don't even want to think about it really, because I don't even know if they are thinking about it currently, or even if they are thinking about it, if they are going to do anything about it. Because quite a whole lot will happen if the Western economy is going into recession, and we don't have a strong buffer, to protect us like we saw during the financial crisis of 2008, 2009, I think, where we had about 60 billion in FX reserves. So many things to talk about now. But Mr. Chukwu, let's talk about the investment angle of it, the market angle of it. Where should investors put their money at this time? And is cash still king in Nigeria when the Naira is weakening and weakening? Where do you see the Naira with the current macro economic environment?
Well, Nancy, it's so difficult for anyone to predict where Naira will be, given the factors I mentioned. We've seen situation where our foreign exchange earnings is declining, and well as our import bill is increasing. So it's difficult for one to place a bet on the Naira. What I can only say is that this is quite likely that Naira will depreciate further. So having said that, it then means that the first thing you need to do is to protect yourself against the valuation of the foreign local currency. And that could come if you invest in dollar-denominated assets. There are a couple of mutual funds that are not dollar-denominated. If you have foreign exchange earnings, if you have a way of converting your earnings into foreign currency, of course, that's a very tedious and complex thing in the country today because of the fact that our currency is not convertible. So you have to look at that. The other aspect is that today, basically what happens is that you look at a mix of investment opportunities within your environment or investment assets. The major investment assets I had mentioned Eurobond already, or dollar-denominated instruments. You have the equity instruments, local currency equity instruments, you have the local currency debt instruments. And interestingly, the yield on local currency debt instruments today are quite low, far below the inflation rate of 17.71%. And we also say the inflation is going to worsen. So that leaves you with the speculative variable income asset like equities, where you can say, look, if I make good choices, like I've already highlighted some of the sectors or industry that could benefit from the political activities or the second half of the year. If you make good choices, if you make good picks, you could have investment that could give you dividend yield higher than at least what you can get from fixed income return, higher than 6-7%. And then you also have the prospect of getting capital gains. What that means is that your investment are likely going to go into equity instruments. The other asset class is real estate. Real estate seems to always meet up with the valuation of local currency, or at the minimum, in the medium to long term, always outperform inflation rates within the Nigerian economic space, not in terms of rental yield, but in terms of capital appreciation. So if you have the wherewithal, I will also say you can play in the real estate sector, knowing fully well there's a store of value, and the store of value, most instances in the past 10 years seem to have at the minimum mirrored the devaluation of local currency.
Okay, Mr. Chukwu, just in less than 1 minute, the July MPC meeting will be in the next 3 weeks. What will you be expecting from that meeting? Of course, you said earlier that the inflation we are seeing now is not the kind of inflation that central banks around the world is in control of, because it's mostly supply side. But what do you see? I think the MPC will be coming over to where you are, the commercial nerve center of the country, Lagos, this month. What do you expect?
Well, my take is that the Monetary Policy Committee members are going to say, let them watch and see the impact of the last 150 basis point increase they had on monetary policy rates. Of course, I said when I was interviewed that it's going to not have an impact on inflation. So I don't think they're going to increase rates afresh, given what I also highlighted, that further increase in rates would mean you're going to push the economy to, you're going to worsen the cost of doing business, given already increased costs coming from energy supplies, energy sources. And that could tip the economy into a very slow growth rate, or possibly a decline. So I think the most appropriate thing they would do is to keep rates and watch as the global economies evolve.
Mm-hmm. That's watch and pray. That's what the Holy Book tells us. Watch and pray. Watch and pray. But in Nigeria, it's not watch and pray. It should be act and pray, because we've been watching and praying for too long. It should be act and pray. Thank you very much, Mr. Chukwu, for joining us on today's edition of the program.
Thank you for having me.
All right, I've been speaking with Johnson Chukwu, who is the Chief Executive Officer or the Group Managing Director of Cowry Asset Management. That's it for you, really. The second half of the year, I hope you've gotten tidbits from what we have said. Protect your money. That is the cocoa of all the things that we've been talking about. Try to look for more sources of revenue, and when you get that, don't just spend your money, invest, save a little bit in case of emergency, but don't put all your money in the banks, because it's not a good idea at this time. I know the banks will not be liking me right now, but that's the much you can take on this edition of the program. I'll see you all again tomorrow. Be the best you can be and be that change that you want to see. I am Nancy Naji. Bye now.